balance sheets as well as share prices eventually.
In the very short term, Mike, this week, what's happened to credit? I mean,
It's weakened. I mean, the spreads are out, but it's not necessarily even back to where we were like in the fourth quarter of 2018 in terms of high yield spreads, but it's also not far from there. So I do think we're in that zone of nothing as bad as early 2016, but since then, it's getting toward the upper end of the range in spread.
Thanks, Mike, for that. Stocks have improved, by the way. The Dow's down less than 1,000 now, 3.4% or so. It has, of course, been a very volatile week for the Dow, swinging more than 1,000 on Monday to the upside. Down almost 800 on Tuesday, back up another 1,000 on Wednesday, and today falling another 1,000 at the lows just off that at the moment. Our next guest says if you're a long-term investor, you should be buying on the dip. Alan Patricof is the chairman of the venture capital firm Greycroft with $1 billion under management. He currently has investments in the likes of Axios, The Skim, and Wondery, to name but a few. And his exits in the past have included Huffington Post and Health Plus One. Alan joins us right here on set. Good to see you.
Nice to have you. Be here with you on this wonderful, exciting day.
Thanks so much for joining. I mean, let's help.
Not feeling so wonderful.
The headline point.
Well, I'm excited. I'm excited for the Biden success, so that's a successful
day. Well, maybe we'll come to that as the factors behind the market move. But if you're a long-term investor, you actually think this is much more something that creates opportunity than should create fear.
I learned a long time ago from a very astute person in the market, and he said if you love a stock and you really know the fundamentals, if it goes down, not that you want it, if it goes down 50%, you should love it twice as much. And that concept has stuck with me for a long time. If you have a company that you really like or that you know, I certainly would not be afraid about dips, but I think for the moment in this very volatile market, I would be staying very calm and not doing anything, frankly. But I think the opportunities are going to be here. We've been there. If you saw the New York Times last week, they had this incredible graph of the last 10 years of stocks. And it went just like this, and then at the last 4 days were like so small, and it was in the context of a 10-year cycle of ups and downs. You know, this is a blip, and we've seen a lot of blips in the last 10, 20 years.
What's it done to your market, venture capital, private equity? Do you get to see lots of opportunities to buy companies? Are they strongly correlated to what's happened in the broader indices or not really?
Well, we're investing in young companies. It's not correlated. It's interesting, the companies you put up there before of ours, Wondery's in the podcast business, The Skim and Axios, everybody keeps reading every day. Companies like that do well. Companies that relate to staying at home and not having to go and travel, I think are going to do fine in spite of this blip. But I think we shouldn't get overly nervous by what's happening, although no one likes to see declines like we're seeing. But when you're seeing volatile markets up 1,000, down 1,000, the best thing to do is just to keep your money hands in your pockets for a while.
You say it's a blip. I mean, why are you so confident that this couldn't be or cause a more prolonged economic downturn?
Listen, I saw the 70s, I saw the 87 blip, I saw the 90s. There's always something that dramatically happens, and I think we're going through. This is a serious. There's no question about it. But I think that if you hold on to good fundamental stocks, I certainly haven't sold any stock I own in the last several weeks.
So what are you looking for to get more confident? I understand you want to buy, but you're not right now. So what will it take for you to buy?
I think we need to see things settle down. I think what's happening in the political season picture is I think will help. I think once that stabilizes and we got into a more normal environment, which I think we're headed into, I think that's going to be a stabilizing force. And I just think general economics in terms of what, thank God, most companies, most major companies are in good financial shape. And that's a very important fundamental. We didn't see that in 2008 because there were some really bad balance sheets around.
I know you focus more on the earlier stage companies, but you know tech incredibly well. Did you think that tech stocks had got a little bit overstretched to the upside coming into this? And in that sense, is the pullback we've seen actually quite understandable?
Well, I think you would have had that kind of some modest pullback no matter what, because things had gotten ahead of themselves. And I think we are going to be going into an environment of anti-competitiveness. I think we're going to see the Googles and the Facebooks, there's going to be a lot of congressional scrutiny, and I think where those companies stand vis-a-vis all the other smaller companies is going to be seriously considered by the Congress and also by the public, and probably during this election cycle.
Hey, Alan, venture firm Sequoia, one of your competitors, sent out an email, I guess, warning some of its founders and CEOs of a worsening economic condition and having them start to ask questions about COVID-19, about headcount, about being thrifty with marketing expenses.
I have to smile because, and I'm not at all critical of that statement, but I remember very clearly, I can't remember what year it was, that Sequoia put out the same kind of letter. You should go check it.
2008, RIP, good.
Yeah, they did exactly the same thing. But we all say to our companies.
It turns out in 2008, that was a prudent time
I mean,
to do
right
that.
now you should be make sure your balance sheet's in good shape, have cash in the bank, and keep your head count tight. But I think you have to look on a long-range basis. I think what they're saying is anyone who's a rational business person wants to make sure their house is in order. And
But it
not
sounds
just
like you're not sending that to your companies like Raycroft.
Well, yeah, we're saying that to them every day. We didn't just all of a sudden say it the last week, but yes, we would reinforce it, make sure you've gotten your costs controlled, because everybody is feeling the after effect of this, except I heard peanut butter sales.
Do you think that it's going to be hard to exit any of your current early stage investments via IPO for the rest of this year because of the current environment?
I think for the near term, I would think IPOs depend on market windows. I said this, I think, on this program a few months ago. You know, people try to catch a window when it opens. The window hasn't opened the last couple of months. I don't see it opening here in the next 3 months. We've got to get through a much more settled period. I mean, you can do lots of quiet filings, but I think to come out into this environment, you got to be pretty gutsy.
M&A as well. Any exits by M&A? Do you think also going to be put off for quite some time?
Well, we have, without naming them, we have a half a dozen that are in process. I haven't heard anything, certainly in the last